Accurate interpretation of this be that it went high. Some people sold, which caused a dip in the stock. Right. I'll go with that. Essentially causing doubt. Not sure about doubt and its success, but uh it's just there are other people on the other side at the same time who will also not necessarily take doubt, but just in the idea that they can profit on the idea that it's going to go down based upon what it is. Once enough people continue to hold, it leveled out due to continued support. This would be an area where you're not exactly sure what's going to happen, whether you need more people behind it investing or anything like that to keep it going. But you do have all throughout this entire area here, you have people who are buying and selling on shorter term bases, which can either cause it to fall, cause it to rise, things of that nature. The logic behind the process is throwing me because it doesn't seem like there is one. It seems like it's vibes based. So vibes based would be fundamental trading. In which case, yes, a lot of any market, because you have the human element in it, has a fundamental aspect to it. So fundamentals can play a part in movement and price movement. The other thing that has a logical basis would be more technicals. And so I don't do much fundamentals. Uh, Granted, it's a way to trade, but I don't generally do it. I do more technical. And so from a technical aspect, I'm looking at things going, okay, price isn't a straight bull run. People are investing, buying, holding, and all this other stuff all the way up. It broke past this original area here, which hadn't been tested back in September of 2022. From September to November, these two areas caused price to drop. I was expecting to see some sort of something there. It didn't. And instead just basically broke through with strong bullish momentum. Now, at this point in time, what you generally have are people who are what you call breakout traders. It is broken out from this resistance and they immediately hop in expecting it to go ahead and just pulse up. I believe that that's majority of what you saw yesterday is we'll mention come back to this mention of the August highs back in 2022 as well, but we'll zoom in a little bit here. You had a really strong pulse up all the way to those August highs where anybody who's in a breakout trade who looking from a technical looking on a chart period, even from a fundamental basis, is looking and going, okay, I believe it's going to go up, but where fundamentally would the human element kick in to be like, okay, now's the time to sell? Well, this would be this area that happened before back in August 2022. This is the last time it was here at this level. And from here, it sort of fell off. And so as soon as you got into this level, you did see an immediate decrease. Now, what is this decrease? It could be a couple of things. One is just people taking profits, which then starts lowering the whatever the price of the value of the thing as well as other people on the other side of the market going, this is a level that I would sell from. So I am betting, especially Solana versus the US dollar, I'm betting the value of the US dollar is going to be stronger than the price of Solana. So there's the comparison there. And so they buy more USD by backing out of Solana. And so they're taking the other side of that, usually with brokers that they're going through. So basically, the broker and a trader are taking two sides of a possible outcome. The trader's going, I'm going to bet you it's going to go down. The broker's taking the other side of that, going, okay, fine, I'll bet you it's going to go up. And so that's how that sort of trades out. And the broker can make that happen because, well, they have so many different stuff all throughout indices, stocks, crypto, foreign exchange, things of that nature, that they make money in not only commissions and fees, but then for people who, take the other side of the bet and get wrong anyway. And so that's where that comes in. So you did have a huge sell off. Now, what does that mean as far as the next what could happen next? Then this is where I come back to technicals. It's like, okay, we've shot up, and once again, fundamentals don't matter to me. I go based upon technicals. The technicals give me an area that I can start managing and controlling risk. And so if I'm looking to get into a trade and I'm expecting based upon technical analysis that this is the area that price is likely to bounce from, I could get into a trade here expecting price to move up higher. or at least get to these highs again and test it again, like it has multiple times in the past. Once that happens, I can get into a trade. And if for some reason price starts breaking below this area, I can close at a less loss than just holding. Like, so this is where dipping in and out of the market is where you can sort of make more money than just holding. Um, you would possibly miss out on pulses like this, but you don't necessarily, if you're trading for, or if you're playing for a pulse like this, you don't know when that's going to happen. You have a higher chance of getting into a move that is more predictable, but not necessarily predictable, um, using technical analysis than waiting for a possible fundamental spike. Um, and so I would wait for something like that, and then I would go ahead and buy, targeting the previous high and things of that nature, watching as price unfolds to see if I need to maybe cut out early. So if I were to invest, I don't know, $100 right here, and it got in here and made it all the way to my target, I'd actually make about $244 minus spreads and commission fees and all that other stuff. So let's knock it down to like 230. If it breaks down below here and hits my stop loss, I'm out $100. Cool. Like that's fine with me, because I know overall in the long term, I'm going to hit a lot more of these 1 to 2s, 1 to 1.5s, things of that nature, than I actually will lose out. And most of the time, I can actually manage it where I get out even earlier, because just price isn't doing what I expected to do, and I can cut out my trades early. So as far as the logic process behind it, the only way that you're going to make logical sense of it is more through a technical aspect. From a fundamental aspect, it's really hard to think about it logically, because you are using, when it comes to fundamentals, it's a lot of market sentiment of traders who are actually in the market. It's a lot of emotions and things of that nature. Whereas the technicals can really sort of be cut and dry, almost scientific to a T. Granted, there's still a human element in it, and so there is some nuances. There's some intuition that plays into watching trades play out in and around these zones, which is why, like, each and every zone that I called all throughout this last week or so, I was particularly telling you what I was looking for. And so if I never saw that, if I was in a trade from somewhere over here, like if I was investing into this or had money into this, because I never saw what I wanted to see to sell, I would still be in this. And currently I'd still probably be in this. Looking down the lower time frames, it looks like we are still moving up. We're still channeling up. So what I'd probably like to see price come back into this level again, and then I'd start looking for something that triggers in my mind that goes, yeah, I've seen this enough to think it's going to turn around now. And I try to draw that on the chart. Sometimes it looks a little bit different than what actually plays out in the market, but that would be the time that I would sell, and I would just be waiting for price to come back down. Now, could price totally, drop back down enough a little bit, never get back to my zone, and then pop back up? For sure, could break that level again, or break this next level here. But I would be playing the same exact thing. I would wait for price to come back to one of these levels that makes sense for price, if it's going to continue going up, to get back in at. So don't try to make it so cut and dry, like you can find all the answers in what is happening, because you never will. There's too many hands in the pot to make sense of it all. From technical traders who don't even care about like the human element and things of that nature, who are usually just using visuals and things of that nature, to fundamentals, where people are actually looking at news and things of that nature. And it's like, okay, well, how did Solana do this quarter? That should make it go up. I'm going to go ahead and buy now and hopefully catch that up rip. That doesn't always happen though. You can go back and check that sometimes great news, Solana might go sideways. Great news, Solana might go down. Like, and you don't like, what is the reason? Yeah, it's hard to pinpoint, because once again, you have a whole lot of hands in the pots. You have algos out there. These are just, bots that you've programmed, very much like, the technical trader, where they are trading um, these certain key opportunities that happen, and they're getting in and out of the market on, within seconds. Um, Things like that can, slowly trickle up price. Then you do have these big, heavy investors that buy in heavier at certain areas, which will cause price to skyrocket. You have other events on a chart that, if you're a breakout trader, things of that nature, you see something happen, then you go ahead and get in heavy because it fits your trading plan. You have break and read. There's all sorts of different ways people are entering the market that it's hard to pinpoint and say this is why price is doing what it's doing. I have found that technical makes it easier because I don't have to try to figure it out. I just come up with a game plan based upon past past data. And it's like using past data, it only makes sense for the areas that I'm looking at and the reason on why I want to get in. Um, and so, yeah, that's where I would not try to overcomplicate it at all.